Welcome back, traders. It looks like we had a quiet tape today, right? It wasn't. Under the surface, a lot changed hands. Micro rotations, headline landmines, and a Fed decision that can flip the board tomorrow. I'll show you how I'm reading breadth, how the dot plot actually moves markets, and the exact trade triggers I'm using into and after the FOMC meeting. If we take a look at SPX, we hit an all-time high today. But if you only watch price, you think new highs equals easy money. If you watch breadth, you'll see some stress. We'll reconcile that. Map the rotations, semis, uranium, gold. Then I'll walk you through the two live trades. One momentum long on a contract winner, one fast short on a breaking scandal, and finish with my post-Fed roadmap. Real quick, if you guys would please consider subscribing and hit all notifications, it would help me out greatly. Thanks. Now let's get into the video. There's 5 things I want to go over in tonight's video. What actually matters at the Fed tomorrow, the breadth, why the week under the hood hasn't really killed the rally yet, a rotation map, offense versus defense, and what's actually leading, 2 real trades, some entry logic on the trades, exit logic, and risk management, and then a little bit of a game plan for tomorrow, pre-Fed and post-Fed triggers. Now I want to start over here by taking a look at the Fed Watch tool. The base case is the market's already priced in a cut, but that's not the story. The story is the path implied by the dot plot and how the future curve shifts during the press release and before Powell speaks. Tomorrow you should take a snapshot of the probabilities before 2 p.m., before the data comes out, and before Powell speaks. After the release, snapshot that same data again. The deltas tell you what real money just repriced. Now that's important because once this data comes out, the market will get a lot more certainty. Things will actually be priced correctly, and they'll know where to put money to work at. So taking a snapshot before and after is pretty helpful to compare data. If we jump ahead and take a look at the December Fed meeting on the Fed Watch tool, you can see that the odds here tilt to multiple cuts by year end. Down here it shows you the odds of what the rates will be at, or the target rates will be. Basically that just means what the market is actually pricing in. The hinge isn't on tomorrow's 25 basis point cut. The market has already priced that in. The hinge is on the 2026 dots sliding down or not. If 2026 medians shift lower, duration and growth catch another bid. If they don't, it's a policy too tight for longer message and we price air out of the high beta corners. Let's take a quick look at the Goldman Sachs projections for tomorrow. We talked about dot plots a minute ago. This is all they are. It just shows where each Fed chair is at and where they project rates to be at what dates. So this is end of 2025, end of 2026, end of 2027, end of 2028, where all the different Fed chairs see the rates being at that time. And this one down here is a longer run, which is just exactly what it means, the longer run. Goldman is projecting that tomorrow will be the first of 3 consecutive cuts. They're forecasting consecutive 25 basis point cuts at September, October, and the December meetings, followed by 2 more cuts in 2026 to a terminal rate of 3 to 3.25. They're also saying that a 50 basis point cut is also possible in October or December, but only if the labor market deteriorates more quickly than they have assumed in their forecasts. I just want to show you guys this real quick just to give you a look at what Goldman Sachs is projecting for the dot plot tomorrow. Something to keep an eye out for on the dot plot tomorrow is if the dots shift down and Powell sounds comfortable with the inflation path, the risk on will continue. Rotation to offense will also accelerate. But if dots are sticky and he has a cautious or hawkish tone, the first move may be a head fake. I'll look for liquidity pockets to fade the extended leaders intraday, then reassess into the close tomorrow. Just keep an eye on the dot deltas tomorrow and not the headline rate. The market's already priced the headline rate in. I want to jump over here and take a look at some charts. I want to look at the breadth and why price isn't really equal to participation right now. On the screen, I have the New York Stock Exchange Composite Index and the McClellan Summation Index down here. And as you can see, we're below this 0 line, and we've been under it for a little while, and we can't seem to get back over it. Historically, when we fail to reclaim the 0, it often marks distribution windows, or at least a sideways chop. Price is ignoring it, but just for now. What do I think this means? I think it means that the rally is being carried by rotation instead of a broad lift. And that's fine, until we get a pillar that slips. A lot of the stuff under the hood right now isn't looking that great, but the price doesn't really seem to be playing along. I think all it's going to take is one bad headline. I think all it's going to take is for one pillar to fall, aka one bad headline, one thing that scares the market or spooks it, and we could see some pretty quick rollover here in the market. On the screen, we just have a SPY with a couple simple moving averages. We have a 12, a 50, and a 200. And down here, we have an indicator that shows us the stocks that are above their 5-day moving average. As you can see, it shows each index and what percentage of stocks are above their 5-day moving average. All of them are below 50%, and the average is 44.76%. Now, that's not great or ideal. It can resolve higher if the breast snaps back, but it sets tinder. Any hawkish surprise will light it on fire. Meaning, if Powell comes out tomorrow and gives us some sort of hawkish or bearish surprise that the market's not expecting, we could see things roll over pretty quick. So you're going to want to keep a close eye and a close ear out on what Powell says tomorrow, how he presents himself, and how he gives outlook. A ratio I like to take a look at is the percentage of stocks in the NASDAQ over their 50-day moving average over the percentage of stocks in the S&P over their 50-day moving average. So to look at that, we just go to FDI slash SF5FI, hit enter. And all this ratio does is it just flags troughs when the NASDAQ breadth undercuts the S&P breadth and then flips. Lately, we've hit prior trough zones, as you can see. Zoom out a little bit. As you can see, we've hit prior trough zones, but we didn't make a higher high on the ratio like we did previously. That's a negative divergence. Be picky with tech ads here. The takeaway from all this is the breadth says tighten risk, price says don't fight it. What's the correct answer? Let's just trade rotations with clear triggers and defined stops. If we take a look at a heat map, we can see what's actually leading this rotation. The leaders have been uranium, semis, select common software, plus gold miners as a hedge. So things like URA, SOX, XLC, and IGV, and GDX. This is offense, not defense. Money is still chasing the high beta plus a hedge with the gold miners. Inside tech, the storage memory and equipment bid, things like MU, KLAC, LRCX, ASML, have been on a tear. That's consistent with CapEx and capacity ramp. It's bullish for gear. Meanwhile, a lot of the mega AI beneficiaries can't make higher highs while the breadth is sagging. They're going to be underperformers for a while until they reset. The big takeaway from this rotation is stop assuming that it's a rising tide. It's not a rising tide anymore. It's a feast or famine market. Own the names that are getting stuffed into ETFs and that are on the portfolio manager's buy list for now. We've gone over the ETF effects in the previous videos, so go back and check them out if you haven't yet. I want to go over 2 quick trades that we made today and then go over a few things on the mega cap sides. Jump over here and take a look at Turb. We saw this when it hit our volume scan this morning. I didn't see it at all on the radar until it hit that volume scan. It had a catalyst hit. The company landed a contract that's roughly the size of its entire market cap. Yeah, that's going to fuel some things. We have a moving average down here in the volume, and this volume was so great, it kind of throws it off. But when you see the volume going 5, 6, 7x its moving average volume, you want to pay attention to these things. As you can see, the first volume bar of the cash open today was about 10x of its normal moving average volume. And that's a pretty telltale sign that people want in. So even if you just marked off this first 10-minute bar, it's like things we like to do in the community here and threw your VWAP on, once it got back above the VWAP and that 10-minute bar, even if you got in here because there was still massive volume, it was still hitting our volume scans, you still had a, zoom out a little bit so you can hear better. Still had a 170% trade today. It's things like that that we've been hitting in the community recently that have just been awesome, and it's been great to watch and see. The other trade we had was a complete opposite of that first one, as it was a short. The news hit on Rick. We actually got it quicker than most people. The news was 5 of their C-suite executives were indicted on fraud, including their CEO. So the company had some problems with their books, and they owed about $8 million in taxes. Instead of paying back their taxes, they were trying to bribe their auditor by giving him free trips to Florida, free trips to Miami, and every single day that he was on those trips, they were giving him $5,000 in spending money. That's not a good look. So once this news hit up here, dropped our VWAP on it, and it was just an instant short. We caught it up here on our news scanner, and it was just a short. We stayed short. We added to the short. It's never a good look when your C-suite executives are getting indicted on fraud and wire charges. So what's the lesson here? Nothing beats the speed of information. It's pretty simple. There's repeatable triggers, speed of information, and that always beats opinion. Now let's take a look at some of the mega caps. Take a look at Microsoft here. We had an inside day fake out, and we closed back below this white line, which is the 55-day moving average. It's not my favorite look going into the FOMC, so I'm going to respect it. Jump over to NVIDIA. It's stuck under these call wall zones that we have posted in the community. It's failing to hold above the short moving averages on retests. If the dot plots tomorrow don't help, it's a sell the rip candidate intraday. I'll be looking to short this tomorrow if we get bad data. If we jump over, take a look at Oracle. This TikTok headline pop today was pretty messy. The real driver for Oracle is the booked cloud growth out the curve. I closed our swing to let the dust settle a little bit. I'll buy structured weakness if the fundamental path remains intact. A little playbook I'll be keeping in mind tomorrow for the FOMC meeting. From the pre-market till 2 p.m., no hero trades. I'll mark key levels on SPY, QQQ, leaders, and the watch list. I'll set alerts, not biases. From 2 to 2:10, which is the release of the data, I'll watch the rate path shift versus the pre-snapshot that we took. If 2026 medians slide, let the first spike settle, then I'll consider buying reclaims of intraday triggers. From 2:30 to close, I'll be watching and listening to Powell. If his tone contradicts the dots, I'll expect two-way traps. My rule: first trade small, second trade only on a retest or reclaim, then trail stops. After hours and the next day, if the breadth gauges start to turn up, those ratios that we looked at, or the summation starts curling, I'll scale ads. If not, I'm going to keep it tactical. This is just a little look into how we navigate a rotation market without getting chopped up. Catalysts, clean triggers, strict risk. If you want this level of real-time detail, levels, squawk, and entries as they set up, get on the Asymmetric Edge waitlist at asymmetricedge.org. The next round of invites will be going out at the end of this month, and after that, they'll be closed for a period of time, so I can get to know every new member who joins and let them get comfortable with the room and the community first. As always, if you get any sort of benefit from these videos, please consider sharing them with a friend, dropping a like, leaving a comment, and let me know what you like or don't like. Any feedback helps. Please consider subscribing, and I'll see you in the next one.